Hello everyone, welcome back to the channel. Today we have David again, who's been here with us a couple of times. So welcome again, David.
Thank you for having me back, Ashan. It's always a pleasure with you.
So for people who haven't seen our previous video, David and I have covered, I think, two large videos and a couple of smaller videos. We discussed private pensions in Germany. And we've also discussed real estate in Germany. And in this video, what are we going to discuss, David?
So in this video, we're gonna discuss what I call the perfect pension plan, which is a system in Germany that not only allows you to have a stable pension when you retire and have a lump sum of savings that you can use flexibly, but use the tax benefits that you have in Germany to the biggest extent, I would say. And you will see that at the end, you have multiple hundreds of thousands of euros in basically assets that just come from tax saving. Right? So I'm very excited about this topic. This is always my favorite topic of consulting clients on. So excited to do that.
Okay, so before we dive deep into this topic, are there any limitations that people must think about, or are there any things that they should think about that make them ineligible for this kind of product or this kind of insurance?
Yeah, so everyone should do private retirement planning. That's what we also discussed like in the last video, no matter what salary you have. There we also discussed what the government pension system looks like, what you should put aside for as a pension, all of that, what different options there are. So if you missed that, then we will link it here or here.
Yeah,
then you can
here.
then you can rewatch that again and get like a deep dive into the German pension system. The perfect pension plan that I'm talking about today has basically two requirements, I would say. The first one is that you need to have a high enough salary that your tax rate is high enough, right? So I would say you would need 60,000 euros plus in salary.
Okay.
Plus the second thing is that you need to have a at least mid to long term perspective in Germany.
So what do you call mid to long term?
So 5 to 10 years, you should say, okay, most likely I'm going to stay here. I know as an expert, you never know where you're going to be and all of that, but it should be like the primarily plan to stay here the next 5 to 10 years. Like in the last video, we also discussed there are pension plans that are completely flexible, right? Where you can start it here and then move next year to another country and can do that for your entire life, right? But for the perfect pension plan for this specific combination, you need like the mid to long-term perspective here. So those are the two requirements to do that.
Cool. Okay. In this video, maybe we are going to do some sort of calculations so that people understand what this perfect pension plan is, how are they going to get the benefits, what are the specifics for that.
Yeah, so in order to understand the perfect pension plan, we have to take a step back and understand again what private pension options there are in Germany. And essentially there are two big private pension options that help you save in taxes in a massive way when you save for retirement when you're in Germany. I'm just going to explain both of them again with their advantages and the disadvantages. You will see they are very different, and then we will get to how that aligns to creating the perfect pension plan. So the first option that you have in Germany is base pension, or also called Horobrente. That essentially is a tax-deductible private pension plan. So the principle there is you pay in money there, and these contributions that you pay are 100% tax-deductible. Right? So it lowers your taxable income by the exact amount that you contribute. When you have a salary of 60,000 euros plus, that will lead to you having 40% plus as a tax refund. Right? Some clients that are like at 55, 60, it's going to be like 35%. When you're at 65, 70, 80, then it's going to be 42%. Right? So that's the first thing. You can deduct the entire contribution. Then the money compounds tax-free in ETFs until retirement. Retirement means earliest 62, standard 67. And in retirement, you get a lifelong monthly pension from the pension provider. So it's really a pension product, not a product that you can pay out as a lump sum.
By the way, in this one, you also have to pay taxes when you are getting this pension.
Exactly. So the pension is income taxable. Exactly. And what's also very important, you cannot get the money out before retirement. So it's really for retirement, it's locked there. Another disadvantage is basically when you're not married, because the inheritance is only to married partner or kids when they're still getting Kindergeld, so when they're below 25 in general. Okay. Right? So just like in the government pension, essentially. Right? Would that pension plan make sense? We already discussed in the last video, when you have a high salary, want to stay here for the mid to long term and want to save taxes for retirement and get a stable pension. Right? Why do I say you have to? This is the aspect, by the way, of the perfect pension plan, where you have this mid to long term perspective in Germany, because essentially, of course, the biggest advantage of the plan, which is the tax advantage, only works while you're here in Germany. Right? Because when you're taxing in Germany, you can tax deduct in Germany. But when you no longer have taxable income in Germany, of course, you cannot deduct this plan. What then happens when you leave is always also a very important aspect, right? With the base pension, then you just pause the contributions there and let the money still compound until retirement and then get a nice pension wherever you retire. But I always say, also from the fee structures and everything, it makes sense to have it for at least 5 to 10 years that enough capital builds up, essentially. And you can imagine, like, we will calculate the example for you concretely, right? In a second, guys, we're going to calculate the perfect pension plan. And you can imagine when you have a 30-year contribution time span, when you're like in your mid-30s, which is typical for our clients, then half of your pension comes from the first 10 years of contribution. No? Okay. So that's very important. Like when you do that for 10 years, you already have half of your pension locked up. Right? Because that money has by far the longest to compound. Right? Okay. So that's the first aspect, the base pension. Right? The second aspect is the private pension or flexible pension, you can say. There you do not have a tax advantage when you pay in. So you have to pay in out of your netto income, right? Out of your already taxed income. Then again, the money compounds tax-free without any Vorabpauschale, without any capital gains until retirement. And in retirement, again, retirement means after 62, standard 67, when you withdraw the money, right, you do not have to tax the entire amount of profit, right, which would be, for example, in a brokerage account, but only half of that. Right? So you get a big tax advantage when you pay out that money. Right? Here, the inheritance is completely unlimited. You can also withdraw the money anytime if you want. Of course, this is not advice for a retirement plan, but like you could in theory. And you can also continue the plan outside of Germany. So it doesn't matter where you are in the world, right? You can still contribute to that. Right?
So when someone, let's say, decides to go with this kind of pension, does it make sense to start at the start of the year, or it doesn't matter, like as soon as you start?
Yes, the sooner the better, of course. Of course, when we start towards the end of a tax year, then it's rather a question, do we do a lump sum in the beginning in order to get the tax benefits for this year? Yeah, but in general, it doesn't matter when you start. Right? Just when you start towards the end, then we can think about getting a lump sum in the beginning to get the full tax advantage for the entire year. Okay, now that we've laid a foundation with those two plans that are available that both have big tax benefits in and of itself, right? Here's how they combine to what I call the perfect pension plan, right? For me, it is the perfect pension plan, right? Everybody has to judge for themselves, but for me, it is. So in the perfect pension plan, you have to have a number in mind that you want to put aside per month. For example, we did an example for Ashan, 500 euros, right? Which you should do with a good, decent salary. Right? Watch the last video when you want to find out how much you should put aside and use our pension calculator. But 500 euros is the example. This 500 euros Ashan now puts into the base pension, so into the level 1 pension. Right? From this 500 euro, he will get a lifelong monthly pension then. We will calculate in a second how much. So that already sets the foundation for a stable pension. Right? Now, for that 500 euro contribution, we get a 200 euro tax refund, right? Because we can fully deduct it from our taxes and we get back money from the tax office via our tax declaration, right? And now this 200 euros in the perfect pension plan, we take and we reinvest it into the flexible pension plan. So then the private pension, the flexible pension, is only fueled by the tax refunds that we get from the base pension. Right? And that means we will also calculate what number is there at the end. The amount that you have in the flexible pension at the end. Right? You did not pay a single euro there yourself. Right? It only came from the tax benefits. Right? And you will see that's going to be a lot of money. Right? So this plan allows you to basically use the tax advantages in Germany to the fullest extent for your retirement. Right? And gives you a combination of a stable pension which like covers your living expenses for no matter how long I'm gonna live, no matter what the market does in that phase, I'm always gonna be able to cover my living expenses, which is a very important thing for most people, right? That's the first aspect. Plus, it gives you flexible savings that you can do whatever, whenever you want with. And that's why I find this combination so powerful, because it's fueled by tax advantages and it's this very good combination of stable pension and flexible savings.
Yeah, seems interesting.
When we calculate this for you, we just did a small example calculation for Ashan essentially with the 500 euros. Of course, we're not going to disclose Ashan's date of birth here, but for his, I think we can say that you're in your mid-30s, right? You look very young for your age. For you, Ashan, when we calculate the first aspect, so for the stable pension that comes from the 500 euros, for you, Ashan, that's going to be between 2,300 euros and 3,400 euros. That's the span of pension that you can expect from a 500 euro contribution when you do that until retirement.
Okay.
Right? So that's the first aspect, right? That we get from the 500 euro. But now we get a tax refund from this 500 euros, so 200 euros that we reinvest in the flexible pension. And write your guess in the comments what is going to come from that in completely, you paid in nothing, right? Drum roll. You're going to have between 230,000 and 345,000 euros in the flexible plan that you did not contribute a single penny to. You only reinvested your tax refund that you got from the 500 euro base pension contribution. That means you have like over 250,000 euros just by using the tax benefits that you got in Germany. Right? And this is why I find it so beautiful, because this money you have for absolutely free use and you pay almost no taxes on the payout. Like we calculated the last time, like it's for most clients below 10% taxes on that. And this is why I find the system so beautiful, because it combines those two good aspects and uses the tax benefits in the most efficient way.
Please hit the like button if you're getting value from this video and consider subscribing. Let's say if someone says, yeah, this is still good, I can do this with ETFs. So what would you say to them?
Yeah, that's just not true. Yeah, so as we discussed in the last video, I have nothing against, of course, ETF investing in a brokerage account. Always do that for your short to midterm savings. I'm a big fan of that. I also do that myself. My wife does it herself. So that's totally fine. But in order to get those tax benefits, you need to have it in a private pension plan that's certified. We will get to how to select a good one there in a second and how we can help you there. But it needs to be in a private pension plan in order to get those tax benefits. Yes, those private pensions are also ETF based, so we also get the return from the ETFs at the end, but it has to be in that structure that's licensed in order to get the tax benefits. So I, for example, I do have a brokerage account, my wife also, and then I also do the perfect pension plan myself. So I have a base pension and I have a flexible pension, both.
Yeah, okay, cool.
Yeah, does that answer your question?
Yes.
so sorry for the answer with humor.
Yeah, it's important. Sometimes, like, everything has its place. Sometimes certain things are important. Sometimes certain things are like misunderstood. For example, as you said, this perfect pension plan is important, or let me use a proper word. It's beneficial if you are looking for mid to long term stay in Germany.
Yeah.
Otherwise, it doesn't make that much sense, as you said in the beginning. In that way, ETF investing can be very flexible. If you think, okay, I leave in just 1 or 2 years, or let's say 5 years, then you have this money, which is very flexible. You can invest in whichever way you want, and then you can have it, and then you can leave Germany. That's a totally different thing. For
exactly. Sure. Very well summed up. Yeah. The aspect is of how do you select a good pension company, how we help you there basically. Our process is, and we will put a link in the description basically from Ashan, where when you go through the link, you get a completely free consultation where either me or one of my team members will look at your situation, look at your salary, calculate for you exactly what should you put aside, right? In order to fill your pension gap and what doesn't make sense for you, what are your wishes, what are your perspectives in Germany and all of that. And then what we do is basically we create a comparison between the top pension providers in Germany. So if you already have an offer from somewhere, you can bring that and we can put it into this comparison software where we do an exact breakdown of all the fees. Right? So we're very transparent regarding the fee structures of the plans. You will see an exact breakdown and an exact comparison of the different plans, right? And then compare the plans with each other and see where you get the most out at the end, essentially. So that's what we do. We are completely independent in that. So we're independent brokers. That means we can offer every single pension that's on the market in Germany, right? So over 160 providers, and we compare all of them basically and see where's the best solution for your individual situation.
Okay. So here I have one more question that a lot of people have. So why you guys? For example, why not someone who's affiliated with a specific company?
Yeah, good question, right? Because that's 95% of the market in Germany, I would say. 95% of the advisories work for a specific insurance or for multiple specific insurances, right? So everybody calls themselves independent at the end because it's not a protected word in Germany, but 95% of the market is actually not independent. Only when you're registered as a makler, right? That means like an independent broker, then you can be truly independent because by law as a makler, you're only obliged to the client. You work for the client, right? When you work for insurance or for multiple insurances, you work for the insurance companies, right? So that's very important that when you do your retirement plan, that you do it with a makler, with an independent broker who's transparent about the fees, who can offer the whole spectrum, and of course is specialized on retirement planning and also on retirement planning for experts, right? Because many financial services also offer the retirement plans like on the side. They also do car insurance and this and liability insurance and legal insurance or whatever insurances. And then like retirement insurance is one of them. I would not recommend you to do your retirement plan with an advisor like that. You can do all of the small insurances, totally fine. But a retirement plan, we're talking about so much money there that you really need an expert for that. That you need a specialized company for that is specifically focused on retirement plans in Germany, finding the best deals there basically, and specifically also tailored for experts. We have over 4,000 clients and we know exactly what are the needs essentially. Plus, financially, it does not even make a difference for it. It doesn't even cost you more to do with us because essentially how we make money, a lot of clients then ask me, okay, and how do you make money then? Why do you do this? Then I always say also as a joke, no, we're a charity. We don't make any money. We're a charitable organization. No, of course not. So how we make money, there are two ways essentially, but when we talk about commission-based plans, right, which is a lot of plans in Germany, then basically it makes no difference whether you do the plan through us or through the insurance company directly or through another advisor. So for example, when we have a plan from Allianz, they don't have the best conditions in the market, but they are very big. So then I'm just going to name them as an example. So when we talk about a plan with Allianz, when you do the plan through us, you get the exact same conditions and the exact same fees that you pay as when you call Allianz directly and say, hey, I want to do a pension plan with you guys. The only difference is, I always say, when you go to Allianz directly, then they are happy twice because they get the commission in their own pocket and get the pension business. When you do the Allianz plan through us, we get the commission and Allianz gets the pension business. So you never have a financial disadvantage in working with us. But of course, the huge advantage that we compare the entire market and then see where are the best plans, where are the best solutions. Right? That's in the commission-based field. We also have a fee-based field that we then specifically explain in the consultation. So we also compare commission-based plans versus fee-based plans. Right? So we really offer the entire spectrum. But the key point is you never have a financial disadvantage in doing the plan through us, but the huge advantage that we scan the entire market and are guaranteed to find the best solution because that's what we do all.
When a client comes to you and they pick a pension plan, how often is it that you advise them to change that plan, let's say after 1 to 3 years, or how often do they come themselves and ask for a change in plan? And how does it affect in terms of fees?
We never recommend to change a plan that we recommend it, right? Okay. Because you can imagine how the fee structure is structured in Germany, and we also explain this in very detail in the consultation. Then in the first couple of years, you pay like off the initial fees in a like commission-based plan, or in the fee-based plan, you pay an initial fee to the advisor, right? A good chunk of the fees is paid in the beginning, right? So basically, when you switch plans, you pay those fees again. So this is what you should avoid, right? Of course, when a client comes to us and has a very shitty plan, right? Then we calculate, okay, you already paid down those and those costs. Does it still make sense to switch to a more cost-efficient plan, even though you have some initial cost again? Yes or no, right? But for plans that we recommended, we will never recommend to change it because these are very good plans. So you should always pick a very good plan from the beginning and then stick to it your entire life.
Exactly. I asked you this question because recently, if I don't know, a lot of my audience watches our day or not, it's the German channel.
Yeah.
So recently they had covered, I think, 2 scandals. One is directly related to insurances,
Yeah.
and another one is not necessarily insurances, but it was just financial consulting.
Yeah.
So
I know
in the
what
insurance-
documentary you're talking about. Yeah. I
Yeah.
also watched it.
So in the insurance scandal, or let's say a controversy, there was this guy. His insurance provider changed, I think, 12 to 13 or maybe 21. I don't know the specific number, but this person or this advisor asked this client of them to change their insurance every single time, and every time this person or the advisor was getting a commission. So
Yeah.
it is very important to at least have a sense of decency, at least to not scam people. So that's why I wanted to cover this question, which is very essential.
Yeah. So you want to know my opinion? My
Yeah,
opinion
sure.
is people like that should be locked up, right? People like this, like it may be legal, right? But it's like highly unethical, right?
Yeah.
This shows how there are many black sheeps in the financial industry that only think about own profits essentially and not about the client's wishes. And by the way, both of those guys from the consulting companies, right? They were with similar consulting companies that have a very bad reputation in Germany. We can't say the name. They sue a lot of people. Actually, really, they do.
That's
Really, you have to be careful. But they work for companies that basically exclusively offer one or two or a couple of insurance products. So unfortunately, that's very common in the German market. These are, of course, exceptions, right? Not all, like 95 of the people I meet in the financial industry are totally nice people, even though I wouldn't necessarily agree maybe with their philosophy, right? But you can be a very good guy working for Allianz, right? Allianz is a very solid company. They have decent products. They might not be the best in the market, but as long as you're upfront about it, hey, I work for Allianz, that's why I offer Allianz products. Right? And I like Allianz. That's totally, I have zero issue with that. I personally wouldn't become a client there because I would want to know the entire market. But yeah, it always angers me a lot to hear about those scandals because essentially it shatters the trust in the entire industry. Right?
Yeah.
And we work very, very hard to build that trust with transparency, right? With those comparisons, with those fee comparisons and all of that. And yeah, that's exactly why we do what we do. Because of basically like this, that like a good chunk of the market still is very intransparent and yeah, not good for the client. Let's put it like this. But the market is shifting. The market is shifting radically, like in the last 5 years especially. There's a reason. We do a very good job, yes. But there's also a reason that we were able to grow that fast, basically, with 4,000 clients, now over 4,000 clients, is that people shifting more away from going to a bank advisor or going to the Allianz guy or going to whatever is a colleague, or that's, by the way, another thing that they like advise a lot of friends and family and colleagues and approach them, and then it's very hard for basically to say no, right? For people when it's like your, I don't know, brother-in-law or your colleague or your friend or whatever, and basically sell those products in this road, right? And that's still a lot of the market, unfortunately, but it's shifting radically towards independent brokers like us, where you actually get a comparison, where you get transparency in the fees and where you actually find the best solution. So that is a massive shift happening. I personally cannot understand how those other companies are still existing.
So I think it's a mixture of politics. It's a mixture of lobbying. It's how the capitalistic world works. So you can't do much about that.
The specific company that these reports were about, they are one of the biggest donors to both big political parties in Germany.
Exactly. I'll link this controversy below David's link so that...
Far away.
So the first link will be David's link if you are interested in having a discussion with him. Obviously, the discussion is going to be free of cost. There's no obligation for you to get this consultation with him or his colleagues, so that even if you have a discussion with them, it's not obligatory that you get any insurance or any product with them. So it's a very good thing that you can have a discussion and get an honest opinion about private pensions and pensions like that.
Very well summarized. Thank you for having me again, Asha. It was a very pleasant talk. And then see you the next time, and still enjoy your summer.